Economic reports give conflicting signals, sending Bitcoin back to the range. Hey guys, it's Keith Allen, and we saw it unfold right before our eyes. Speculation ahead of today's economic report sent Bitcoin above 71,900 briefly, but conflicting data in the form of a 4% unemployment report. We were looking for that four handle to, show that things were cooling off in the economy. But parallel to that, there was a sizzling hot NFP report, non-farm payroll report. So I don't know how unemployment can be going up when job payrolls are going up, right? It just doesn't make a whole lot of sense to me or the market, and that's why, in part, we saw a bit of a whipsaw move. So let's get out of the music and into the charts and see where we might be going from here. First thing I want to do is give you a quick glimpse at what the economic numbers were, so that we can actually, let's first look at what this move was ahead of those economic numbers, and then we'll look at the economic reports, because they're kind of history at this point, and we'll go from there. So ahead of the report this morning, we saw Bitcoin price pumping up just nearly to 72K. It was like 79,450 on some exchanges, 79,7 something on other exchanges. Might have ticked 72 on others, but from what I've looked at, we were just sub 72K. And then a quick reversion, which literally happened right at the moment that those reports came out. Now, I could say, I wish I could just say that this was just all speculative on the ECB yesterday. And, of course, they instituted a rate cut. And that, also we had some economic numbers yesterday that were pointing to a slowing jobs in the form of an increase, an incremental increase, I might add, of the initial jobless claims, right? So we were looking for an hot unemployment report to give us kind of confluence with that, to back up that data. And so, there was a lot of speculation maybe, and that helped fuel things. But I'll be honest with you. We were talking about these moves in our Telegram group, the Material Indicators Telegram group, literally 90 minutes before this all happened, before it played out. And one of our members asked, if there was any explanation for the volatility that we see around these economic reports. And the truth of the matter is, you can tell a lot from the liquidity placement and movement that's going on, and what tends to happen. And you will see my direct quote from that post in Telegram. And also, by the way, we got an awesome global trading community, and it's free on Telegram. So I'll post the link in the description if you want to join us over there as well. But basically, ahead of these significant reports, like economic, unemployment and jobs and PCE and Fed speeches, et cetera, we tend to see some volatility leading up to those events. And, what direction it goes initially really kind of depends on what the vibe is and what the sentiment is. And so price gets pumped up in a lot of cases, as it did today. And in that move, in that action, right, this liquidity gets cleared out. And so that makes it very easy to move things in the other direction, right? So people FOMO in, they go, oh man, it's pumping. The report's going to come out in our favor, and we're going to break through 72. And they came very, very close to doing that. But again, the data was not supportive of that, at least not satisfactorily to the market, because, we first saw this unemployment number come in at 4%, said, hey, maybe things are moving in the right direction. But non-farm payrolls up, just absolutely shattering expectations, like by a lot, right? Whether you go off the forecast or the consensus, whatever the case is, that's nearly 100,000 higher than the consensus, right? And so average hourly earnings month over month also went up, year over year also went up. So this is a bit contradictory. Government payrolls up, manufacturing payrolls up, private payrolls, non-farm payrolls up. So this is a bit contradictory of this information here, and that has the market concerned that, where yesterday literally people were speculating, maybe we'll see a July rate cut. Now I think there's less sentiment for that. Of course, these moves tend to happen, right? These knee-jerk reactions and the volatility tends to happen around these reports, and then things settle down. So if you're not, there are opportunities here, obviously, to make money. But if you don't have the stomach for it, or you don't have the skills or the fast enough fingers to do these trades, then it's safest to just sit on your hands, wait for the dust to settle. I think that since we have the Fed meeting next week, likely we would stay in this range here, and then get some clarity after Fed Chair Powell's comments on Wednesday. I don't think anybody's expecting any action from the Fed on this. I don't think anybody's expecting a cut or a hike, but it's the words and the tone and the sentiment that comes from that speech and that interview with the media questions to Fed Chair Powell that really seem to give us, I think, the best clarity out of all this. So as we continue through this, by the way, hey, Wakas, good to have you back in the stream. And anybody that wants to join us, I know the comments are open here on YouTube. So if you're following on Twitter or X or whatever you call that platform these days, you may not be able to comment with me directly, but on YouTube you certainly can. So if you have questions or comments through this, feel free to chime in. And on that note, if you enjoy these streams, please do me a favor and smash all the buttons, especially the subscribe button, and especially share a comment. I appreciate the support you guys are showing me, and I engage with each and every one of those comments. So now back to the analysis, right? So looking a little bit further out, right? There are some notable things happening here, right? So in this process, right, we've cleared out the liquidity to the upside and then cleared it out to the downside. Let me apply a little bit of contrast here to see what's happening here at the moment, right? So we got knocked back into the range, but what I like happening here, two notable things, right? Before I put that contrast in, notice that in this process, some of the resistance is thinning out, right? So ultimately, we've got to get through all of this liquidity up here. Either need to take it, or it needs to drop down and get filled, or it needs to get roof pulled for us to get through this, because we don't have the same density, the same concentration of volume down here to make that move happen, right? That's why I say we're not ready, right? People are asking, with all of this ETF demand, and incidentally, we're on now 18 consecutive days of positive inflows for ETFs. People are saying, with all of this ETF demand, with all this ETF buying, how are we not breaking through this range? Well, we're not breaking through the range because, quite simply, there are sellers distributing into these ETF buyers. That's how the game works, okay? So don't be surprised. And really, the very simple picture that the liquidity shows in the order book shows us there's so much more resistance than there is support in this near range. It's just not time yet. So be patient. But other good things that are happening here is support is starting to move up. And now I can apply that contrast and show it a little bit better here. Support is starting to move up. We're trying to RS flip this 69K, which has been like forever, right? We've been trying to do this since the beginning of March. All these failed attempts here that have, even the brief times we've moved up above it. Here we go. Down here, we've fallen back in. This is where we have now our new technical resistance, 71.5, and that was, really edged out today, but we've fallen back into this range, right? So look, are we getting some consolidation here? I'm okay with that. I'm totally fine with that. As I said before, I want to see consolidation above this 69K. And look at this. The 21-day moving average is inching right up to that level right now. It is just sub 69K. It's at like 68.8 at this point. So by tomorrow, if we continue on this trajectory, we could be up above that, and that would be that would be a phenomenal retest, right? If we could retest this, survive it, and validate the RS flip, I think that would be tremendously bullish. Now, if we wick back down here, then I think there's a better than average chance that we fall back into the range. Maybe 67, maybe 65, potentially could go as low as retesting this 58 to 60K range if things really break down after we hear Fed Chair Powell's comments later in the week, next week. But at the moment, I think we stay above this level, and we can see that again here in terms of the liquidity. I'll zoom out a little bit further and make it even a little bit more visible here. So So this looks good, right? That we have this liquidity moving up here, inching up incrementally above 67, and here it's 69K. I'd like to see more to give us more confidence that we can get above this stuff, but in the meantime, I'm fine with continuing to consolidate in this range. I think that it is healthy. We have lots of history where we just have not retested a lot of prior consolidation ranges. And so the consolidation ranges are really, I think, where we build the strength for the moves. And so, we never went back and revisited this. We never went back and revisited this. We should, technically speaking, should go revisit at least one of those ranges, but the market doesn't necessarily do what it should, right? So we could be right. We could hold our ground and try to be right, and wait until we are confirm that we're right or confirm that we're wrong, or we could just play and trade what is in front of us. And that's how I choose to trade this market, because I've been left in the dust before by waiting for what I expected to happen to play out, and the market moved away from me. And this is, these are lessons that are learned the hard way. So now that I've learned those lessons, I've been in, I've been in this game long enough to I may not always learn in the first time, but I eventually learn. So I've been playing this move obviously all year long, as most of us have, and I see plenty more opportunities ahead, especially with the ETFs really fueling a narrative in terms of demand and use case. Connor's saying 68.8, here we come. Hey, I'd be fine with that, right? Because if we do that, if we do actually touch that 21 day moving average down there, then that invalidates the RS flip, and that tells us a lot, right? As much as I'd love to just move up, I'm happy with moving back down and buying some more cheap Bitcoin, right? Everything down here is on sale. Here and lower is on sale, in my opinion. So there's that. Yesterday, we talked about ETFs a little bit, but I was really short on time, and I didn't get a chance to get to any ETF charts, which I actually wanted to do. So I want to show you something that I think is pretty interesting, right? And it's in the short life that it's had, the ETF has been living some classic patterns here. Let's expand out. And I love cup and handle patterns, right? This may or may not be a cup and handle. I kind of view it as one. This being the cup, and this, let's draw a handle. Let's see if I can draw anything today. I suck at this, by the way, right? We got a handle here, dip down, and then boom, 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 like little of this, and then boom to the all-time high. This was just a rocket rise for the ETFs here. And it left quite a few gaps. Now, I'm not really sure. I'm not a gap trader. So I don't know how how you would expect for these to get filled, especially this early on. I don't know that comes into play. Also, I think something different about the Bitcoin ETF in terms of these gaps versus a traditional gap situation, whether it is in TradFi or in crypto. Crypto, you're trading 24/7, 365, right? So there's no days off for price to move away from the market. Same thing with traditional equities. But with a Bitcoin ETF, with a Bitcoin spot ETF, the underlying asset trades in these days off. So we do see more gaps, obviously. So I don't know, probably too soon to know. Maybe somebody is more in tune to gap trading and could speak to that or share a comment with us about that. But I don't know that these are really situations that they need to get filled. That said, maybe some of the near range ones or nearer range ones could. But where we sit right now, we're just about, we're not very far from all-time high territory, first and foremost. And by the way, if you don't see this as a cup and handle, my feelings aren't hurt. I could see it also as kind of a bull pennant here, where we had the flagpole, or bull flag, I should say. We had the flagpole, and I'll just draw these real quick down and dirty. And we had, the flag forming like so, right? That's also possible. And obviously speaks to this long leg up here in the upside move, whatever the case, right? So local support on the ETF retested a couple times here at the what is this, like 37.92 range. I'm on the BlackRock IBIT ETF. BlackRock has the most volume. They're all trading at different levels. They all have their own price points, but roughly, all trading the same, more or less. So in this instance, right, this looks like solid support. The 10-day moving average, because there's not a lot of history here, right? We don't see a 200-day even coming into play yet. The 100-day barely has any history, and uh, the ETF is trying to find its form. Here we had an inverse head and shoulders, and that played out really perfectly, right to the top, and double topped here. And so our resistance at this point seems to be right around this top here. And again, we have confluence with this candle wick down here. That's at like 41, right? 40.99, $41. We're now at 40, and the all-time high is at 41.99. All-time high. What's that in terms of a move? 3.5% ish. Okay. So the question now is, are things coiling up here? Right. We had a little bit of consolidation down here briefly, not a lot, just a few days, 1, 2, 3, 4, 5, 6 days, a little bit of consolidation here. That's good. Several retests at that level. That's good. The 10-day moving average tested here. That's good. So are we coiling up, maybe consolidate here for a little bit till we get through the Fed meeting next week and then make a run at this, perhaps? Or do we retest support if the news is hawkish? Do we retest support? And then, if these levels don't hold, then I'd be good based on what I'm seeing here down to this prior support level, which, by then maybe has confluence with the 50-day moving average. Anywhere in this range I'd be good with. I think that would be a good support level, and potentially a good entry level for anybody that's playing that way. Not advice, by the way, just my perception. But if things break down from here, then maybe we do go after some of these deeper gaps. That's certainly not out of the realm of possibilities. So keep that in mind. That's just, I thought it was interesting to look at this chart and see kind of the classic patterns that we're forming, see this inverse head and shoulders play out perfectly, and see where we are coiling up at what is currently local resistance, and with very little room to go before we have an approach at all-time high territory. This is not very different than what we see, of course, in the Bitcoin chart, right? So not a lot of room to go to get to the all-time high. What's the distance here? Let's see. We're currently at here. All-time high is here. So it's very, like half a point difference, not even. So yeah, we're on the same, we're playing the same game here, right? I personally happen to like the underlying asset. By the way, last night I posted a chart where we did have a nutrient precognition signal, but I did say in that post that if we went above 71.6, that would invalidate, and that is indeed what we saw happen this morning. We could fall back into this range here, but I was a little bit concerned about that signal, because at the moment that it first appeared, the MACD was actually starting to fade and flip the other direction. And then by the time right when I posted it, it went back full green. So a little bit of conflicting information out of the economic data, and a little conflicting information out of the signals. I got to tell you, though, I have a lot of confidence in this. This is also trend precognition, by the way. There's two different algos I'm running here. The A2 plus up here with the arrows, the A1 down here with the dots. And I do have a lot of confidence in this. This doesn't necessarily mean it's a straight drop. It just means that momentum is definitely seems that momentum is fading. So this morning's move may have had a little bit of how should I say, choreography behind it, as I said, and you will see in the description of this video that I literally quoted, wrote exactly what I thought was going to happen, and that is literally exactly what played out in terms of that whipsaw move we saw this morning. So How do we head into the weekend? We head into the weekend knowing that we have strong resistance overhead, that we have support building above 67K. 69K is still questionable. We're waiting to validate an RS flip here. And we know that we have a really positive outlook for Bitcoin largely because of what's happening fundamentally with the ETFs, both here domestically and abroad. But the economic situation obviously weighing heavy on the market at this point. So I think the real move happens after Fed Chair Powell's comments on Wednesday. In the meantime, we could see some more volatility within this range here, and there's plenty of room for that to happen. We could see more volatility within the range, and I would expect that weekend killer whales are going to do what they always like to do here this weekend as well. But as you can see, brown whales have been really stepping out during this move above 71 today, 71 to 72 almost. And purple whales are kind of trading the range a bit. They're trading actively. So just be mindful of that. I think that things are going to settle down here after, and we'll have some clarity after the Fed makes their decision and speaks on Wednesday. In the meantime, have a fantastic weekend, guys. Trade safe, manage your risks so you can stay in this game for a long, long time. There will be some volatility between now and the Fed meeting. You can choose to trade it if you have the stomach for it and if you have the skills for it. If you don't, there is nothing wrong, absolutely nothing wrong with sitting on your hands, waiting for things to settle down. Know what your targets are, right? You can go ahead and place your orders if you know what your targets are, and let the market work for you. Chasing it rarely ever works out well. I share that with you from experience. All right, guys, with that, I'm going to wrap it. Got a busy weekend ahead of me as usual. Looking forward to spending some time with the family, doing things I love with the people I love. Hope you will do the same too. Have a great weekend, everybody.